Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our top story. BSP Governor Ben Diokno says the central bank is willing to extend loans to the national government for as long as necessary to help the economy recover. Diokno says the advances made by the BSP during the pandemic do not diminish the independence of the Bangko Sentral and have been communicated clearly to the public. In July, the Monetary Board extended the maturity of the 540 billion short-term no-interest loan to the government, which is expected to be repaid in October. This was the fourth time the BSP provided cash advances to the government since the start of the COVID-19 health crisis. Diokno has earlier said the economy may return to pre-pandemic levels by the fourth quarter of 2022 or the first quarter of 2023. Now, a second hearing on Philippine Airlines' Chapter 11 case in the United States has been set for September 30th. During this hearing, PAL will seek court approval to obtain debtor in possession or DIP financing in the amount of $505 million. That amount will be provided by its direct and indirect holders. The DIP financing is composed of a multi-draw term loan facility in the amount of $250 million and another multi-draw term loan worth $225 million. Recall that the bankruptcy court already granted access to $20 million, which will be critical for vendors and wages. Now, after hurdling the first stage of its bankruptcy proceedings, PAL has likewise committed to pay its 570 million peso backlog to the Civil Aviation Authority. The Philippine Star reports that Finance Secretary and former PAL Chairman Sonny Dominguez had asked Transport Chief Artugade to push through with its collection efforts with PAL. Okay, guys, it's a brand new trading week. Let's kick off with a virus update. You can see on my terminal here the worldwide new cases versus the Philippine cases. And just to understand how massive this is going on, global cases have now passed 224.5 million cases. Deaths have exceeded 4.6 million. But on the upside, you've got vaccines. That's actually more than 5.69 billion doses already administered worldwide. And some good news here, at least in the developed world. The United Kingdom will be abandoning plans to call for proof of vaccination to enter certain venues there. They may actually even drop the mandatory testing for returning travelers. They are still easing the restrictions there, and that will be announced this week. So over there, you've got more and more normalcy coming into play. Meanwhile, you can see here on the Philippines, our case is still much above 20,000. We are seeing those record spikes. Now, let's take a look at how the equities markets are doing. There's a lot of uncertainty going on as to how soon the central banks all over the world will be paring back their assistance here. And you can see in Wall Street on Friday, all three main indices there dropping in the red. Meanwhile, you've got Asia Pacific a little bit on the dip this Monday. You can see the Nikkei 225 opening down by 0.3%. The FTSE Straits Times as well over in Singapore down by 0.8%. This amid, of course, concerns of a slowing recovery compared to what was expected. Let's take a look at how we are following or not following. So it seems to be the case also in the red this morning, down by 0.5% to 6938.34. This happens as, of course, last week we did see foreign selling of Philippine stocks accelerating, even as our index did rise last week and the peso was little change. We still saw the 5-day moving average of net foreign outflows accelerating to $116 million. That's way below the 20-day moving average of $1.01 million in inflows that we are seeing. And let's take a look at the sectors here. Everyone in the red, save for services, holding firms, bringing down the index there. That's down by 1%, followed by properties and financials. Speaking of financials, however, I did want to take a look at that counter, specifically after the couple of big banks here did get some investment grade credit ratings. You've got Moody's Investor Services affirming the investment grade Baa2 credit ratings of both BDO and RCBC. Now, when you talk about BDO, they did mention that their tier one capital has increased to 13.9%. That is higher than what the BSP requires, which is a minimum of 10.5%. This, according to Moody's, they expect BDO's capital to remain sufficient for business growth and well above the regulatory minimum. They are also saying BDO is unlikely to experience significant liquidity pressure. However, they're saying that the asset quality will be further depreciating and the profitability of BDO will be constrained for the next 12 to 18 months due to these soared loans. RCBC, meanwhile, even as Moody's has affirmed their credit rating, the negative outlook continues there. They did mention that RCBC has quite a higher share of retail and SME loans and is more exposed in the current environment. Now, here to talk to us about the mid-month market scenario and, of course, what to expect here, we've got Robert Samson. He is the Mindanao Business Development Section Head and Licensed Stockbroker of First Metro Securities Brokerage Corporation. Good morning, Robbie, and welcome back.
Good morning, Danny. Nice to be back.
Okay, Rob, let's kick off with our banner story here, PAL, which has, of course, filed Chapter 11. There's another hearing that's going to be happening on September 30. I just want to understand, how do we treat this stock right now? How are you looking at it? It's, of course, been suspended since mid-June, but now that things are getting clearer and clearer, are you able to reprice this or revalue this in any way?
Well, it's I think it's a bit too early to reprice this yet, but definitely the mere fact that it won its approval to access $20 million is a nice first step in its recovery. So, given the fact that it's still suspended as of now, it's only going to give investors a lot of time to digest all these news. So, even though it's entering bankruptcy, the mere fact that it's starting its recovery plan, it should bode well for its future prospects. We can anticipate that even though the overall sentiment should still be bearish on PAL in the long term, as it approaches its unfreezing in the Philippine stock market, we should see more and more investors able to understand better what's in store for this company. And it's a good thing that the company has actually signaled what their plans are in terms of how they are able to recover from this issue.
But just in general, is this now the time to be, going back to the cyclicals, going back to the travel stocks, the tourism stocks? We do see recovery all over the globe, but it hasn't necessarily spilled over here in the Philippines. Is now a good time to be positioning, or are the downside risks still very much palpable?
Well, definitely the downside risks are still very much there. We believe that the travel industry, while they may recover eventually, they are going to lag behind other sectors when it comes to Philippine economic recovery. So we are of the belief that it might be best to wait a little bit more, especially given the fact that we lag in terms of access to vaccines, in terms of imposing vaccinations on our people. It's only going to be a bit more challenging ahead of us. We have to remember that the Delta variant and all the other variants that could come after this pose a dynamic threat to the travel industry. And that's something that is going to be very, very hard to forecast for a lot of these travel companies. So we would prefer investors to stay in the safer sectors right now, which have shown some good recovery from the pandemic.
Okay, let's get back to your safe sectors later on. But still on the topic of PAL, how does this filing affect Cebu Pacific? Is there a specific, relationship between their restructuring and the performance of Cebu Pacific as a stock, or is this completely unrelated? And do you see more of these sort of bankruptcy filings to be coming into play, not just for airlines, but for other distressed industries?
Well, there are certainly overlaps between PAL and Cebu Pacific, given the fact that they are both in the airline industry. But we have to understand that they do have different business models. So we all know Cebu Pacific caters to a little bit of a different market from PAL, and so thankfully, as of now, they have not signaled anything to that effect yet. And given the fact that travel is very, very slowly inching upward, and that Cebu Pacific is positioned to be a budget carrier, we believe that it's not going to necessarily follow in PAL's footsteps, but definitely again the risk for industries that are exposed to the pandemic, that are most affected by the pandemic, continue to pose a threat to the bottom line of these companies.
Okay, let's talk about those sectors that you're mentioning. Of course, one would be telcos. They've performed generally or even surprisingly well compared to all the other sectors here. And you have one in particular, Dito, which has just passed their second audit. And not just that, they're going to launch broadband na rin. Is this, the main telcos, the duopoly, have basically said that, it's not yet a big threat, simply because they have such a big network. There's a lot of capex to be spent, but it does seem that they are catching up. How are you treating these stocks? Is Dito now a real contender here?
Well, the fact that the two major telco players have different kinds of revenue streams signal that Dito may have a long time and a lot of catching up to do in terms of reaching their status. So, but we actually do like the telco industry. We believe that it's continued benefiting from the pandemic, and that we believe that over time, as more and more people transition into working from home, as more and more people understand the value of staying connected to other people reliably, we should see more and more upside for companies like Tel, for companies like Globe.
How much more upside, Robbie? Because they've already been outperforming the index. Is it still time to be entering these markets? Specifically for the likes of Converge, which since its IPO has not gone down in any shape or form. How do we know when it's already overpriced?
Well, for in our view, one of the picks, one of the stocks that you may want to consider investing in right now is still Tel. It still has quite a little bit of an upside from where it is right now. So I think consensus targets are at around 1,535 for that particular stock. So that poses a solid upside from where it is right now. But we do acknowledge the fact that Converge and Globe may be a bit valued highly, priced highly right now, given their recent run up. So we would advise investors to be a bit more cautious when investing in those two names for the short term. But for the long term, they do have plenty of good things going for them.
Okay, let's talk about a couple of other stocks that are affected, especially since we are looking at the end, so to speak, of the current MECQ in a couple of days and now transitioning to the localized granular lockdowns. What's your outlook on the restaurant industry and the mall industry? Have they been resilient? Has this current lockdown showed that they're still able to function, and they're still able to, and the consumer story is still strong despite all of this, and is the worst over for them?
Well, we've seen from their performance last fourth quarter of 2020 that there indeed is a pent up demand from consumers to go back outside, to eat out, to go out with friends. So we believe that's the same thing that will happen once we start easing the restrictions, especially now given that a lot of people are vaccinated. So we do believe that they are indeed poised for a good recovery. They've shown their resiliency. We've had plenty of consumer discretionary companies posting better net income within the year. So we think this pent up demand will only continue as more and more people um, get acclimated to going out once again. They feel safer, and another aspect of that is that people have now understood that they could actually still eat outside even from the comfort of their own homes. They can still access those restaurants via technology, and so they are starting to understand better that, hey, this is something that we can continue to do. We can still continue eating our favorite food. We can still shop online, and so that is something that we believe will be a good thing for the industry moving forward.
Interestingly, Shakey's up by 3.1% this morning. And finally, just for the mall side, what's your outlook on the malls? You did mention restaurants, people can still dine in. But what about the retail spaces in malls, especially with the advent, of course, of e commerce?
Well, for the retail spaces, it might lag compared to its restaurant counterpart. So we have to understand that even though people are still going out, there's still pent up demand for people to go out. They might be refocusing their spending in other areas. So that's something that we have to continue to monitor. We're going to have to see if the retail sector is indeed going to be able to recover just as fast as the restaurant sector, because they tend to have some differences when it comes to how people view them as a necessity in their lives.
Okay, so food muna bago shopping.
Yeah, yeah.
To you, and as you mentioned, still a lot of room to run for those telcos, specifically PLDT. Thank you so much, Robert Samson. He is, of course, from First Metro Securities.
Thank you so much.
Here are other headlines for keeping our eyes on. The national government paid about 60.5 billion pesos in debt in the month of July. Preliminary data from the Treasury Bureau showed that the government's debt service bill slipped by 0.6%. That's compared to the same period in 2020. Now, more than 97% of the total debt repayments went to interest repayments and the rest for amortization. Overall interest repayments also fell to 59 billion pesos, while amortization payments slipped by 8% to 1.5 billion pesos. But despite that drop in July, the 7-month debt service bill climbed by 37% to over 834 billion pesos. That's from the 608 billion pesos in the same period of 2020. Now, the Education Department reports that enrollees for the new school year has reached 24.6 million. That figure is expected to hike up further as the agency extended the enrollment period until September 30th. But today already marks the first day of the school year for students across the country. This is the second school opening under the distance learning system, which was implemented as the government suspended face-to-face classes as part of its pandemic response. Secretary Leonor Briones said that they have distributed gadgets donated by the Finance Department and the Customs Bureau to what they call last mile schools. These are the schools that have nearly been forgotten or were left behind. And that's the first look into the business day. Today is Monday, September 13, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.